Hello students, now we are taking the problem number 6 on the admission of partner. So here problem number 6, A and B share the profits in the proportion of 3 divided by 4 and 1 divided by 4. So this is the proportion and ratio becomes here 3:1. And their balance sheet as on December 31, 2016 was as follows. Sorry, here you write the year as 2018. So December 31, 2018 was as follows, and balance sheet as on the 31/12/2018 was liabilities, assets, rupees, and liability side, sundry creditors 41,500, reserve fund 4,000, capital accounts A and B here, A invested 30,000 and B invested 16,000. Next, asset side, cash at bank 26,500, bills receivable 3,000, debtors 16,000, stock 20,000, and fixtures, not furniture here, fixtures rupees 1,000 and land and buildings rupees 25,000. So balance sheet total tally amount is 91,500 both side here. And next, adjustments are given. On 1/1/2019, C was admitted into the partnership on the following terms. That C pays rupees 10,000 as his capital, and C brings here 10,000 capital, and that C pays rupees 5,000 for goodwill. Goodwill is rupees 5,000, and that goodwill amount 5,000, half of the goodwill, this sum is to be withdrawn by the A and B. Half of the goodwill, how much here? 5,000 is there, no? Half of that 5,000 withdrawn by the A and B here. Third one, that stock and fixtures be reduced by 10%. Here reduced by 10%. Which assets these are? Stock and fixtures. And a provision for doubtful debts created on debtors and sundry debtors, debtors and bills receivable at 5% here. Here a 5% provision for doubtful debts is to be created on the sundry debtors and bills receivable. Both are here assets on the provision here. Next one, that the value of land and buildings be appreciated by 20%. Land and buildings value is appreciated, means increased. And next one, there being a claim against the firm for damages, a liability to be extent of that 1,000 should be created. So this is a provision for damages. Provision for damages, firm damages. So this is the unrecorded liability on the debit side of revaluation account. And last one, an item of rupees 650 included in the sundry creditors is not likely to be claimed and hence should be returned back. So 650 amount of creditors is returned back here. So it means decrease in the value of total creditors, it is rupees 650. So that should be recorded in the on the credit side of the revaluation account. Means it is a decrease in the value of liability. So these adjustments are given like this, and so prepare all the necessary ledger accounts and the new balance sheet of the firm, assuming that the profit sharing ratio between A and B is not changed. Same ratio will be continuing here. So there is no change in the ratio, profit sharing ratio. So this is all about the problem. So once again I'll dictate the goodwill treatment. Goodwill, C pays the rupees 5,000 for goodwill, and that half of the goodwill 5,000 withdrawn by the A and B. Withdrawn half only, they withdrawn here, full amount not withdrawn here, only half of the amount 5,000 is withdrawn by the A and B here. So only first and second adjustment is related to partners capital account, and third one, fourth one, fifth one and sixth one are related to revaluation account. So there is decrease or increase in the asset and increase in the value of liabilities are given here. So these adjustments are recorded in the revaluation account, and these first two adjustments are recorded in partners capital account. Let's start the revaluation account. So now revaluation account preparation. First draw the lines, four columns you need here to prepare the revaluation account, and put the debit and credit on the corner, and particulars rupees. It is the main important here. So now only third, fourth, sixth and fifth here we have to take the adjustments. First and second is not related here. So third one, the stock and fixtures be reduced by 10%. Reduced means decrease in the value of asset. Decrease in the value of assets are recorded on the debit side of the revaluation account. So first one, which asset here reduced? Stock. to stock. What is the value of stock in the old balance sheet? It is 20,000 and now it is to be reduced by 10%. So 20,000 into 10%, it becomes 2,000. Next one, fixtures also reduced here to fixtures. Fixtures, how much amount in the old balance sheet? 1,000 is there, 10% reduced. So 1,000 into 10%, it becomes 100. 100 rupees reduced in the fixtures value. Next adjustment, in that adjustment only one more is there. 5% provision for doubtful debts. So it is also decrease in the value of debtors. So PBD or PDD. PDD on debtors. At what percent? 5% is there. So debtors amount in the balance sheet is 16,000 and 5%, it becomes 800. Next one, bills receivable also reduced here. In the bills receivable amount also they make provision for bills receivable. So provision on bills receivable, that is also on 5%. So total amount of bills receivable in the balance sheet is 3,000, 5%. So 300, it is 150. 10% becomes 300 and 5% 150. Next one, next adjustment is that value of building, land and buildings be appreciated. Appreciation means increase in the value of assets. Those are on credit side. Land and buildings. Land and buildings. What is the amount of land and building in the old balance sheet? It is 25,000. How much increased? 20%. It is 5,000. Next one, there being a claim against firm for damages, a liability to the extent of rupees 1,000 should be created. So it is the unrecorded liability. So how much here? Provision for damages, it is an unrecorded liability. So how much created? 1,000. Next one, an item of rupees 650 included in the sundry creditors is not likely to be claimed. So hence it is written back, written off or written back. So it is decrease in the value of liability on the credit side. So here creditors written back or unclaimed, not claimed or unclaimed. So it is unrecorded is unrecorded liability or asset. Unrecorded asset it is, not liability, it is asset. So now it is amount 650. These all are the adjustments which are entering in the revaluation account. So make it total, which side is more? ಅಥವಾ ಇದು ಏನು ಬರೆದಿರಕನು ನಡೆದಿದೆ, ಅನ್ರೆಕಾರ್ಡ್ ಅಸೆಟ್ ಲ್ಯಾಬಿಲಿಟಿ ಏನು ಬರೆದಿರಕ ನಡೆದೈತಿ, ಏನು ಫಕ್ತ ಏನು ಬರೀ ನೀವು ಇಲ್ಲಿ ರೆಕಾರ್ಡೆಡ್ creditors is not claimed here. So 5,650, here also 5,650. Total amount becomes, difference amount becomes here 1,600. So that should be transferred to old partners capital account. Old partners capital account. Who are the old partners here? A and B. A and B. That 1,600 should be distributed among the old partners in the ratio of, what is the ratio here? Old ratio 3:1. 3 divided by 4 and 1,600 into 1 divided by 4. That becomes 1,200 and 400. So this is the revaluation profit 1,600. That profit should be distributed among the old partners. A it is 1,200. B got 400 profit on the revaluation of the assets and liabilities. and that revaluation profit should be transferred to here partners capital account, old partners capital account by revaluation account. Revaluation account 1200 for A and 400 for B, and new partner is not getting the any old profit here.